Welcome back to the latest gold, XAU/USD, technical analysis. On the H1 chart, gold is currently trading around the 4,376 area, and the price structure is showing an interesting battle between bullish and bearish trend lines. Let's break down the setup step by step. First, we have the ascending support trend line. This ascending trend line represents the bullish structure that developed from the lower levels. Price has been creating higher lows along this structure, showing that buyers have been stepping in whenever the market moves lower. This trend line is important because it gives us a clear indication of the underlying bullish momentum. As long as price continues to respect this ascending support structure, the broader recovery remains technically valid. A clean break below the trend line, however, would weaken the bullish structure and could increase the probability of a deeper correction. Now, moving to the descending resistance trend line. This descending trend line represents the short-term bearish pressure that has developed from the recent high. Price has been moving lower beneath this structure, creating lower highs before the latest recovery. So we currently have two opposing structures. The ascending support trend line is pushing from below, while the descending resistance trend line is controlling price from above. This creates a tightening structure where the next confirmed breakout could determine the direction of the next major move. Now let's look at the support zone. The key support area is located around 4,346 to 4,358. This zone is important because it can act as the first line of defense for buyers if gold starts to pull back. If price retraces into this area and finds strong buying pressure, it could provide another opportunity for the bullish structure to continue. However, a decisive break below this support zone would weaken the current setup and could open the door toward lower levels. Now, moving to the resistance zone, the immediate resistance is positioned around 4,393 to 4,402. Gold is currently trading just below this area, making it the key level to watch. A strong H1 candle close above 4,402 would be an important bullish signal. It would indicate that buyers have successfully overcome the immediate resistance and could potentially shift the market toward the next upside levels. On the other hand, if gold gets rejected from this resistance and moves back toward support, we could see another consolidation phase before the next breakout attempt. Finally, let's discuss the long-term target. If gold successfully breaks above the 4,393 to 4,402 resistance zone and maintains bullish momentum, the next major upside area comes around 4,441 to 4,450. This is the long-term target zone marked on the chart. A sustained breakout above the descending resistance structure, followed by a confirmed move through the 4,402 resistance, would significantly strengthen the bullish scenario toward this target. So, the key levels are very clear. Ascending support trend line for the broader bullish structure. Descending resistance trend line for the current bearish pressure. 4,346 to 4,358 as the key support zone. 4,393 to 4,402 as the immediate resistance. And finally, 4,441 to 4,450 as the long-term target zone. For now, the main focus is on how gold reacts around the resistance area. A confirmed breakout could bring the long-term bullish target into focus, while a rejection could send price back toward the support zone for another retest. Stay focused on confirmation, manage your risk carefully, and avoid entering the market based on a single candle or level. Now moving to the next pair, pound/USD. GBPUSD is currently showing a bullish structure on the 2-hour chart, with price continuing to respect the ascending trend line from the recent lows. This rising trend line is acting as dynamic support and indicates that buyers are still maintaining control of the short-term structure. The current price is around 1.35336 after a strong bullish move from the lower levels. As long as price remains above the ascending trend line, the overall bullish structure remains intact. However, after such a strong move, a short-term pullback or consolidation should not be ruled out. Now moving to the key support area. The major support zone is located around 1.34951 to 1.35018. This area is important because it has previously acted as a reaction zone, and it is also close to the ascending trend line. If GBPUSD pulls back into this region and buyers step in again, it could provide another opportunity for the bullish structure to continue. On the other hand, the key resistance zone is between 1.35516 and 1.35624. Price is currently trading just below this resistance, so the next major move will depend on how the market reacts here. A clean breakout and sustained 2-hour close above 1.35624 could open the way for further upside and confirm another bullish continuation. But if price gets rejected from this resistance, a pullback toward the 1.35018 to 1.34951 support zone could happen first. The RSI is currently around 60.81, which supports the bullish momentum without showing an extreme overbought condition. So the key levels to watch are simple. Support is 1.34951 to 1.35018, while resistance is 1.35516 to 1.35624. Above resistance, bullish momentum can strengthen. Below support, the current bullish structure would start to weaken. For now, the bias remains bullish as long as price continues to hold above the key support and ascending trend line.